So let's jump right into the video, right? Trader Joe here, back again with a very, very, very important video. It's vital for your success. And this is going to be all about psychology and just having rules set in place, because if you're not aware of it and you're oblivious of the issues you have, this is going to be a beautiful call out for you to get better, become a better trader, and chase the dreams and get funded and get payouts, be consistent, and always have profit coming in every single month so you can stop stressing about not having enough money, because it's very, very possible. And with almost a decade of experience in this industry, all I have put my life into is trading and mentoring and coaching other people. So that's what I'm going to do here for you today for free. And this is, probably for beginner traders, but also experienced traders, right? I'm trying to get both of you guys in an area where we can talk about the issues that you're going to either face or you're currently experiencing. So let's get into it. So the first part of the psychology course is going to be identifying your personal bad habits. Now, this could be anything, right? But I'm going to go over a few things, right? I'm just going to put bad habits. Okay, let me move this mic a little bit. And what exactly am I talking about when I say bad habits? Well, I mean over trading. Okay, that's one bad habit that you really need to figure out. You've got no checklist, which if you don't have a checklist, go get my checklist, because that's after almost a decade of trading, and that's literally right there to help you and take you from A to Z as far as a checklist and rules and how you should be approaching this whole trading thing, especially if you want to make this your life and make money consistently. No strategy. It's really hard to type because I have my phone right in front of me so I can make sure I write all this stuff down. No strategy. I have a strategy. You can get it. Yes, I charge you a little bit of money for it. The reason I do is because I had to sit down for several hours and record the whole video and edit the video. I'm only charging you for the time that I sat down at my desk and worked on this for you. I'm not charging you for the knowledge. The knowledge is worth anywhere from $500 to $1,000 worth. It's actually priceless knowledge, but whatever. We won't talk about that. Being impulsive. Now, this is a thing that I'll tell you what. Being impulsive was a problem that I had for several years, to the point where I just didn't care anymore about trading, and that's where I stopped being impulsive. So that kind of benefited, my reasoning behind not being impulsive anymore. I was just so sick and tired of losing. But I'm going to go over all of these. Greed, another issue that I had, and then another very, very big issue that I don't think it should be an issue, but it seems to be with a lot of my students, is no SL or TP. No SL or TP. So with this right here, okay, your bad habits, over trading can come from many different issues, right? It can be from winning and having overconfidence and thinking that you can just take another trade. Hey, no problem. Let's just take another trade. Let's run the bag up, run it up. And then you end up losing that second trade. So then you end up taking a third trade. And then that's also considered revenge trading, where you're trying to make back your money and you don't want the market to hurt you. You feel like it's offending you, so you have to make your money back. That's a big, big no-no, okay? The point of trading, again, is simplicity. Try not to overcomplicate it. Do not risk more than you're willing to lose, because that can open the door to over trading. If you are risking more than you are willing to lose, it is over trading that you are going to experience. Okay. No checklist. Again, go get the checklist. I have it somewhere in my social media. It's in a link in the description. It's in the bio. It's somewhere. Go get the checklist. It's really quick, easy to download. All right. The checklist is important because if you're not looking at the chart and knowing exactly what you're looking for, right? Knowing how you're going to approach it. And what I mean by that is having a checklist of, are there points that need to be covered before we enter a trade, as far as what is the trend? If I'm looking for a buy, what trend am I looking for on the higher time frame? What trend am I looking for on the lower time frame? What kind of candles am I looking for? There needs to be some simple checklist. How I create my checklist approach is to say, okay, I'm looking at the higher time frame. The daily says it's bullish. Beautiful. I'll remember that. I don't really care if it's bullish or bearish. I'm just taking note of it. So I check the daily. If the daily is bullish and we have a clear uptrend, cool. I'll just think about that. All right. I also break it down into where's the lower time frame trend. Well, if the daily's bullish and the lower time frame trend is bullish, maybe that's a very good incentive for wanting to continue that push to the upside wherever we may go, but to also mark levels that we are probably moving towards or eventually going to be moving away from. Okay. And also mark out my liquidity, mark out the gaps in the market. Make sure you have an approach to before you get into a trade, because if you don't, I'm telling you, you're not a trader. You're just doing random shit. Random shit. All right. Impulsive. Being impulsive. Oh, I'm sorry. I skipped strategy. No strategy. A strategy, there's a dime a dozen strategies. Really, there is so many different strategies. The easiest and the most commonly used and well-known strategy is supply and demand. If you want to break down on that, exactly how I trade it, so you can close out and profit, you can go to break even without risk on the table. You can leave runners to go to full take profit. No matter what the trend is, as long as you execute the proper way for consistent profits. I teach you that in my market mastery program. You can go get that super cheap. Like I said, I charge you less than what it costs to pay for Adidas shoes or Nike shoes that are on sale, right? It's not expensive at all. Price might go up though, so that's on you. The greed factor is something that all these traders are all just, they can't get it out of their brain because everybody online just talks about money and shows money and flexes their watches and flexes their cars because it's just good for their business. When in the reality of trading is none of that shit matters. The money doesn't matter. So it's crazy that greed is a major issue, because in trading, the money is not supposed to be part of what you are learning and what you are focused on. But it's very hard to subtract that away from trading because it's what we're doing this for. We're doing this for money and freedom. Okay, so greed is a very big issue. And if you're going to work on that, the best thing you can focus on is to try to rewire your brain to focus on the skill set of looking for the right. Be right about your setup approach. Be right about covering all your to-do list and your checklist. Check all the boxes off before you get into a trade. Okay, that is how you remove greed from the equation. Because, and also don't over risk, right? Again, this all comes back to risking too much of what you think you're going to make back on some random trade. All right. The amount of people that are sitting here and traders that I know personally that they have all of this. They got all of this. They got the over trading, the no checklist, the no strategy, the impulsiveness, the greed, the no SL or TP. But SL and TP, stop loss and take profit, are like the first things you should be learning. Okay. Your stop loss should be immediately on that board before you even get into or immediately on the chart before you even get into the trade, okay? Creating, and you're gonna hear this probably, a bias. Now, creating a bias just means you have this super, super sure thought about where price is gonna go. Like, you're like, oh, it has to go this way. Oh, it has to go that way. It don't have to do shit, all right? Keep that in mind. It could stay where it's at. It could wipe you out completely out of the market. And then it can do what you thought it was going to do eventually. It doesn't matter. None of that matters. None of that matters. Get over the fact that you're not going to be right all the time. Okay? That's why strategy is really important. That's why the discipline is important, because we expect to lose. So creating a bias, why it's good and why it's bad. If you do your due diligence on what is the market doing today, what am I looking for, I covered all my checklists, covered all my, done everything I had to do as far as getting ready to enter a trade. Did you create a bias though? And a bias is good and a bias is bad. There's a reason that you're getting into the trade, and it's because you think it's going to go up, right? It's good to have an idea of where you think price is going to go. That's completely normal. And a bias is also bad because if you're looking at the chart and you say it has to go up, the second that it doesn't go up, you start to beat yourself up and tell yourself, well, what the hell did I do wrong, right? A bias is good and bad, but you have to differentiate between me just being stubborn and thinking I have to be right, or me saying, okay, well, price is telling me it wants to go up. Will it go up? I don't know. I'm just here to observe. So that's a really big difference, right? Create a bias, but do not think that you have to be right. Okay? You are not the market maker, right? You don't make the market move. So keep that in mind. Create a bias. It's good and bad. I'm just going to leave that there. So let's move on to a super, super important one, which, my God, proper risk management. You are going to go through the same thing I've went through, what all the other traders have gone through, which is going to be over-risking, right? Nobody ever has a problem under-risking. What'd you think about that? There's nothing that I've ever seen about trading where it says, oh, man, this person's just under-risking, and oh, man, how to beat under-risking. There's no such thing as under-risking, okay? Over-risking is the biggest problem because of greed. Okay, because of thinking you're so right about the situation. You have to be right. It's psychology. You have to be an observer. You don't have to be right. But another thing, you're not going to understand how proper risk will affect you until you've actually done it for at least a month to 2 months. So I challenge you to do proper risk for a month to 2 months. And with my checklist and you using proper risk, you should see some profits at the end of the month. Almost guaranteed. I'm going to be like Lysol when it says it kills 99.9% of germs that COVID creates or whatever. I'm going to be 99.99999% sure you'll see more profits or at least less loss in your account using the checklist, having a proper strategy, and using proper risk management. That's literally the name of the game. Whether it's a break-even day or a really bad month, there's other people making money, and you're the one that might not be making money because of this little issue right here, proper risk management. All right? Risk 1% to 2% of your account, okay? Even if you have a small account, here's the problem. If you have a small account, like $100, let's just say you have a $100 account, and you're risking $20 a trade, even though you can't do that on a regulated broker, you're probably using an unregulated broker. But if you have $100 on the account and you're risking $20 per trade, how many trades must you lose to wipe the account out? You won't even be able to risk $20 on several trades as your account diminishes. Okay, by the time you get to $40 in the account or $50, you can't even use the same lot size. So you're gonna have bigger stop losses if you want to risk $20 per trade. But at the end of the day, if you have a $100 account risking $20, horrible risk management. If you're trying to grow the account, you're just trying to flip it, and that's not sustainable. Even though that's what I teach in some of my videos, that's just for fun. That's fun. I'd say I don't care about the $50. The $50 is my stop loss. I don't care about $500. The $500 is my stop loss. That's fine. So there's different ways to trade and different ways to make your money work for you. So let's remove that from the situation. But I want to let you know that I do teach people how to flip their accounts, and that's all for fun. I don't try to say, oh, make this a living. It's just for fun. The proper risk management is going to come in handy several months down the road of applying this to your live account, because guess what? You've compounded the account successfully. Okay, every time you slowly go up, and you accrue that profit slowly over time. Every time you take another trade, you're now 1% to 2% risk. Is not the same dollar amount and risk amount that it was when you first started in the account, because now the account has grown. So now your 1% to 2% risk is still larger than when you first started, so long as you've used that proper risk as you slowly increase the account. It's very simple math, but people can't seem to grasp it because they don't want to see the future. They don't want to see the future. They want to see right now. They need what is that word called? Instant gratification. They need it right away. They need that money right now. It's like, what are you gonna do? What are you gonna do with $100 and blow the entire account in one trade? Even if you made $100 off your $100 account, which I've done plenty of times, I've just flipped it and done it and all this fun stuff and pay myself. Even if you made that, that's not sustainable, right? You can't just do that and just guarantee that, hey, this is how my life is going to be the rest of my life. I'm just going to flip accounts. That's not true. You need to have eventually a set of a very specific set of capital and a specific set of risk, and slowly accrue that profit over time. That's the only way to do it. And with proper risk management, you will see consistent profits. It's just inevitable because the market's going up, people are making money, and you're the only one that's not. And there's a reason for it. It's because you have no proper risk, right? I know I'm out of breath on that one. So let's move on with that. Okay, so the next thing that we're going to be talking about is coming back from losses. Now, I'm going to actually bring this back to the proper risk. I'm going to bring this back to the proper risk management. If you are to say that you lose 2 trades in a row, risking 1% risk per trade, and Monday you came into the markets, took a 1% risk trade, you lost it, damn. All right, Tuesday comes in, you take another 1%, given that you don't overtrade on Monday. Tuesday comes in, you see a really good setup, you take it, you lose it. Okay, damn, I'm down 2%. Monday and Tuesday were losses. Guess what? It's not the end of the world. Okay, your risk to reward plays into that factor, right? If you're risking a 1% to make 3%, you have a 3-to-1 risk to reward ratio. Beautiful, cool. Guess what? You just made back on Wednesday. You took a trade that worked out and hit a 3-to-1. You just made back your losses from Monday and Tuesday, and now we're moving towards the end of the month. Back in profit, you should be up 1%. We're back up 1%, right towards the middle of the week. That Monday and Tuesday no longer really matters because now we're back in profit. And then guess what? Thursday comes in, you hit a great trade, another 3-to-1. Boom. Now you're up another 4% or 3% in total, 4% on the account for the week. Beautiful. 4% of $10,000 is enough to pay a car payment. Okay. So we're looking at the small scale. Now let's look at the higher scale. When we're looking at funded firm, prop firm, challenge accounts, and you have a 100K account, you have 4% in the account after using that proper risk. In that week, you just made $4,000. You can be done for the week. You can be done for the week. It's all about longevity. Okay. And you don't know, you don't see it now, but I'm telling you, I've been funded. I've gotten payouts. I made $6,000 in a week and a half trading. One trade a day. If you win or lose that trade, there's two approaches you take. If you win, you're done with the day. If you lose that trade, you take a second trade, given that you've done another chart analysis and you've sat back for about 5 to 10 minutes and said, okay, what is price really doing? Is there another setup that's going to play out or set up eventually? Then you take that second trade, risking the same amount. You don't risk more. You don't martingale. You just stay the same. Other than that, when you do that long enough for at least a month, do all this for a month and a half, you're gonna see how profitable you can be and how finally, it's weird, man. It's like you almost get like a real life high from being so good at what you've worked so hard to do and build, right? Because that's what I've been living off of. I've been living off of feeling great about what I have built and the discipline I have built. And that's what I love about trading now, is because it taught me to be so disciplined to where I can let my profits slowly come in over time. I don't need to make a banger right away in the same day that I'm looking at the chart. It's slowly coming in. Here we are, profitable for the week. Did Monday matter? Did Tuesday matter? No, it didn't matter. It only matters if you're stressing yourself out about trying to make a crap ton of money and being greedy and being impulsive and having no checklist and having no strategy and having no confidence, no stop loss, no take profit. All those bad habits play into not being able to reach this day trader status, which is 1 to 2 trades a day, 1 to 2% risk. Don't risk more on a trade after you lose the first one. You don't want to go ahead and risk more to make it back because you lose that one. Guess what? Now you're even down further in the account. Now you really got to make it all back. The third trade, fuck it. We're going to run it up. You get what I'm saying? It's so bad for your psychology to start off risking more than you should, not having a set plan of approach when you get onto the chart. And I'm just rambling on. I'm just telling you really the reality of trading from what I've experienced. So other than that, it was a quick video. I'm done for the day. And I wanted to really cover a little mini course on psychology and being really adamant about focusing on this. Get this right. Get this right. And you're on the way to being profitable. You are on the way to getting funded. And that's what the name of the game is, right? All right. Stay blessed, stay safe, work on this. And I'll see you on the inside if you end up getting the mentorship.